Good afternoon. I'm with Vince Lanci of GoldFix, one of my favorite, writers and accounts on X, on Substack, prolific content generator. Vince, how are you today?
I'm fine. Thanks for having me on. Sorry, anyway, we're all busy right now, which is a good thing.
Yeah, it's been a busy Christmas. This is one of those Christmases where I felt like I could take a day off, but I couldn't take a week off. There's just too much going on. I live for this stuff, right?
Yep.
Look.
I just hired someone. I mean, just like to that point, I just hired someone, and Christmas week he wanted off, and I'm like, so the guy I hired is taking off when I need him right now most. So anyway, all right, so we're good. Do you hear me?
Yeah, it's good.
All right, good.
It's good. Look, first question. Silver. What the hell is going on, Vince?
Yeah. I think from all right, so the market has entered I don't know if it's geometric or exponential, I don't know what you call it, but it's entered a phase. Here's some things that I can say to you that went down for sure, and then we can piece it together and come up with a conclusion. When the market got to 50 or so, for whatever reason, producers who had metal to hedge started hedging. And by that I mean literal producers. And then you also had retail liquidating coins. And something changed, and I don't know what it was. At least I didn't know what it was then, but I kind of know a little bit more about it in hindsight. And what changed was, obviously, there was more interest in silver, and silver can go a little bit more ballistic than gold, or a lot more ballistic. But there was a behavioral change in the market as well. And I think the reason the market actually kind of micro hesitated after $50 is because everyone started selling. The retail who have been holding silver since 1979 and 2011, those folks were saying, oh, I get to sell it. I get to get my money back, or whatever, it's a new all-time high. That's a cue to sell. You should consider taking profits. So you had the producers selling, you had the retail selling, and you had an inundation. This is since October. So for example, the LBMA crisis was resolved. That's kind of the last time we talked, right? As a crisis, it's resolved, but as a problem, it didn't go away. And they were leased metal by China. They were leased metal by the US. And it seemed like, okay, we're fine. But then all this metal starts coming into the US from producers that are hedging. It's not officially in the COMEX. And from the retail that are liquidating, happy to make a little bit of money. And but the price kept going up. So that made no sense. When production is coming into the US, the people who buy it, the jobbers, the banks, hedging. They have metal to sell. But there wasn't a lot of metal hitting the market. And so it continued to climb. Now, the catalyst in retrospect for the big picture that brings us to silver is when the US declared silver as a critical mineral. We talked about this, you and I. There's a movement for the US permittably to hoard silver, to buy silver, to subsidize companies to accumulate silver, just as we've done with lithium, with uranium, and whatever else we deem as critical. And right about that time, there was a publication put out, like a new American Monroe Doctrine. And I'm actually going to tie this to Venezuela. Not that Venezuela is a silver country, but behaviorally, the United States started becoming much more protective of its natural resources. And so essentially the escalation of problems with Venezuela started, cutting off their access to cheap oil. The silver supply coming into the US that was not making the market drop. And then the dislocation in price. China's price went from a little bit higher to a lot higher than the US. To give some people some numbers on it, the premium, is $8. So when silver was trading $72 in the US, which is high enough, Shanghai was trading 80. Now, some of that premium is explained by dislocation and the fact that these markets are becoming more regional. But the other aspect of it is it's not being dissuaded over there. They want the metal. And I think what you and I are starting to see is the demand in China, aside from the speculative demand, is real. It is scared of the U.S. Closing off the candy store because it was getting a lot of cheap metal from those Latin American producers. And I think they're being squeezed, whether intentionally or not, they're being squeezed. And with London out of the picture, London's kind of like a zombie organization right now, the LBMA. I think what we're looking at here is a geopolitical natural resource squeeze. And you see it with Venezuela with the oil, which, by the way, that hurts China. I had a conversation with Eric Young, and the Venezuelan oil goes to China. Not all of it, but some of it does. So that's cheap oil that they can't get. So everything is being cut off in the Western Hemisphere. And I think, although silver is the funnest to talk about, and certainly something that we live and breathe for, it's the bleeding edge of a very pointy spear that's being pointed geopolitically in the world. And then the final thing is, everyone knows about this, not everyone, but China defensively has said they're not going to export or allow silver to leave the country after December 31st. And that's what the media is picking up on. So why is silver up here? Because silver is a valuable collateral at the monetary level for the BRICS. And silver is an industrial metal that has been kept low. What's the opposite of a bubble, Robert? A crater? Right?
Silver's been a bottom, a big bathtub bottom.
Yeah, a big rounding bottom. That's a crater, exactly. For decades. So I think what we're looking at here is, and I'm not saying it's going to stay up here, but I'm saying we're seeing the market start to price silver closer to what it should be valued at historically.
Yeah, it's really interesting. Very, very good points there. It's interesting because that's still the China story, the January 1st China story on the export controls of silver. Right. Now, it's interesting because it's a China story, so it's always kind of opaque. We never know exactly what the rules are, but evidently they're definitely clamping down on silver, and the government's taking full control over who can ship silver out of the country.
Right.
And they're going to have full visibility over it, right? So that immediately causes the market to panic and immediately start to think that there's going to be a deficit, that the supply is not going to be there. Just talking about like market tactics and looking at the silver chart here in 2025. I mean, like all the way up until the end of last week, I felt like this was one of the most textbook clean uptrends of any market I've ever seen. Yes, it was overbought, but overbought means nothing. In a bull market, it's going to be overbought, and it's going to stay overbought for a long time, up until the end of last week. And then when it went from 70 to 80 in like 24 hours, I was like, okay, this is now getting a little frothy and a little dangerous. But if I'm saying that for the first time in 2025, for the first time in this rally from 30 to 80,
right,
we're just getting a little the parabolic meter is just hitting the red line. It tells me this is not it. We got further to go. And if there are still some shorts, some naked shorts in this market, the market's going to find their pain threshold. And it might be 90, it might be 100, who knows, it might be above 100, but we're still probably going a little bit higher in the near term. But in the very next breath, I'll say, when I see some of the stuff I've seen on X this weekend,
I know.
It gets me a little worried.
Yeah, I know. We're in a bubble of our own making, but it still gets you worried. Yeah, I totally see that.
What do you make of some of what's going on X this weekend?
Well, yeah, we're going to have some fun talking about that. But I think, one of the things that's been rolling around in my head that I think you touched on really well, and I think it's worth mentioning again, when you see a market that's overbought by some measures, and you also know that overbought doesn't matter when new money is entering a market, and you're trying to figure out where it can go, although you're not necessarily putting a target on it behaviorally. The phrase you said was well, you didn't say the phrase, but the phrase you said that reminded me of was, where's the max pain? And the max pain is higher still. It is. And that's not, in my opinion, it's not because there are so many shorts out there. There aren't a lot of shorts out there anymore. There's just a shortage of metal. So to the point of the max pain, if, and I could be completely wrong about this, but if China is showing stress at its supply chains being broken, and the US is doing the breaking, and the Western Hemisphere is being taken offline for them in many ways, for oil, for silver, for copper, then the max pain is higher because there's a shortage, not a short. Now, if you need, I mean, not you, but if anyone needs something a little bit more granular about it, here's something that will kind of give you like some, it's conjecture, but it's pretty empirical. When LBMA had their crisis, this is the max pain trade thing, right? What you're saying? When LBMA had their short squeeze, which was pronounced over before it really started, the US and China and presumably other people, other entities, loaned them metal. The lease rates spiked. Everyone got leased metal. And those leases were approximately 90-day leases. If you have a 90-day lease, you have to replace the metal. So while it looked on the surface like the LBMA was fine, the question is, why did all the metal that get loaned to the LBMA not stay at the LBMA? And that's because, this is observational, we're not sure, but because people like Eric Young and myself have been looking at this, it's almost like, to use Eric's phrase, drop shipping. China leased metal to the LBMA that the LBMA used to make delivery to India. So it's drop shipping. And that means when the LBMA's leases are up, they have to get more metal. Where are they getting it? I don't know. If China has announced that they're not going to be able to lease it anymore after that, if maybe they are, I don't know, then the pain trade is still higher. So I think by your measures and by what I see, the pain trade is still higher, although I don't know how much higher it is. I don't really see a lot of speculative longs. I mean, obviously people are long, but it's the ETF longs that are buying now. You know what I mean? It's not the hedge funds. I think the hedge funds have gotten out of the way. So with all that in mind, so I just wanted to talk about the max pain trade. Seems like it's higher, and that's because I'm not speculatively long anymore. There's an example for you. I'm not speculatively long anymore because I'm cleaned out. It doesn't make sense.
Yeah, this is an interesting moment because just upon my anecdotes, like in my little world,
right?
The diehard guys who were buying bags of silver at $4 an ounce, they've started to sell, and they've been selling a little bit on the way up since 50, but they're still very long. They just lightened up.
Right.
Which is logical, totally logical. Right. If you've been holding those silver coins for 20, 25 years, and now you have a 15x or more, I mean, of course you lighten up, especially if you're older and you might need that money to pay, your living expenses. But then I'm also getting text messages from younger friends in their 30s and 40s. Should I buy silver? And I'm like, well, you're asking me now, $70? Like, why not a year ago? Why not, And so my response to all of them is like, why now? Like actually, can you ask yourself, like why now? Like, what's it for? And most of them is just because they're hearing it's going up, right? And I'm like, that's not a good idea. Like that's not, because you're hearing in the news it's going up, that's not a reason to buy something. In fact,
the classic FOMO.
Exactly. So we're starting to get the FOMO for sure, but then again, they don't own any silver. So the same people who are texting me, should I buy silver? They have no exposure to it, right? Yeah. So it's not like somebody who's already long and is now just full of greed and wants even more exposure. No, they got no exposure. So it's still an under-owned metal, highly under-owned asset, but there is some greed in the air.
No, you comment about, it's overbought. It's overbought, but it's really not overbought. But your comment about the retail is asking if they should buy it, which is classic FOMO mentality, but they haven't bought any yet. They're not adding to a winning position, right? And Robert, they haven't bought gold either,
right?
So it's almost like gold left the station. Should I buy silver? It really has become.
Exactly, and that's exactly what it is. So I started to notice it about 6 months ago when people started talking to me about platinum, because I wrote a Substack article in May and I got a lot of inbounds like, yeah, that's interesting. Like gold is way over 3,000 and platinum's still at 1,100. Right. And I was like, yeah, it's a good value. It's a good relative value, but caveat, central banks don't buy platinum. So there's kind of a reason why it's cheaper at this point.
Right.
But hey, if you have some money you want to put into metals, platinum's a good option, right? And so I started to notice that moving down the food chain, because gold had gotten too expensive for a lot of people. They started to think about platinum and silver, right? And so I think we're continuing to see that.
It's almost like in the commodity realm, you're going from using the minor analog, majors to juniors, in that respect.
Exactly. 100%.
I think if I can add something to the whole platinum aspect of it, and this is why I would say to you, those people that, like you say, people are acting FOMO about silver, but yet they don't own it. And this is, so I want to say it's Toppy short term. You always say stuff like that when you hear that. But your point about platinum is the same real point, meaning if gold goes to $4,000 and people ask you about platinum, let's say 2 months ago, you would say, or what it sounds like you said was, yeah, platinum as a relative value is very cheap. Gold can go back down, but let's understand, platinum's never going to be bought by central banks the way gold is. So on a relative value basis, platinum is cheap. And that's a reason to, let's say you're an arbitrager like me, buy platinum and sell gold, which is a good trade in retrospect, but that's not something I want to do. The interesting thing is, and I'm saying this from a conspiratorial China master plan, meaning platinum and palladium and silver and every other commodity, and that is gold is the only truly, for the most part, useless commodity. It's easiest to accumulate because no industry suffers. And so if everyone de-dollarize and you use gold because it is a pure monetary metal. Now, when gold gets to its certain height, this is the analogy I've been using, the Game of Thrones analogy, the what's his name, the Ice King? Well, he's basically, gold is up here long enough. Remember when gold was going sideways when we talked last? We said when it breaks out here, but the miners had already rallied. Yeah, I feel like the miners were like silver and platinum. Gold's not going back down. Let's start to buy the miners now. Now it's gold's not going back down. Well, I guess all the commodities are going to be raised up from the dead, starting with the other metals. This is an example of something that was completely idiotic. I don't want to say where I read it, but I read an analysis that was talking about platinum, okay? 2 months ago or 3 months ago when it had just cracked $1,000. And the analysis was completely fundamental. And it said platinum has breached the psychological level of $1,000, and it is attracting buying, speculatively speaking, as well as shorts who have to cover some stops. We believe when this moment is over and the market stays under 1,300, which they believe it would happen, we believe it goes back down. Why? Now, why? Okay, I'm like, okay, fine. Tell me why. Is it the fundamentals, right? They weren't arguing fundamentals, but they were a fundamental firm. They were a physical firm. They weren't arguing technicals. They were arguing historical regression to the mean. And they were saying Platinum is over its whatever moving average. Historically, it shouldn't trade any higher than 800. We're in the 8 Sigma or 12 Sigma category. And I went, normally sitting down with my favorite neo-Keynesian buddies, I'd say, yeah, okay, I get that. Regression to the mean is going to happen. It could be with a drift, but it has to come off. And then the very next day, I talked to someone who was well-connected in China, and I said, are you guys buying platinum? Is the retail buying platinum over there now? Some platinum trade like $1,000. He goes, yeah. I go, why are they buying platinum? That was my question to him. He said, because gold's too expensive for them now. I went, but platinum is relatively expensive to where it was. He goes, they're not buying platinum because of platinum. They're buying platinum because they can't afford gold. Mm-hmm. So I went back to that original article and I said, you know what? You guys are crazy. People aren't buying platinum because of platinum. They're buying platinum because they can't afford gold. And I said, silver will be next, but I didn't know where silver will go. Anyway, the point is, people that are comparing platinum to platinum are missing the whole point. Gold is the king commodity, and it's telling everything that anybody who owns gold is going to have more money to spend on other things, whether it's candy at a store. You know, it's a wealth effect. It's creating wealth. And the bricks are going to be buying, you know, bricks. Day laborers are going to be buying Ferrari soon. Anyway, that's the idea. So I agree with you.
Yeah, no, I mean, and that makes perfect sense. And honestly, what attracted me, because I kind of, you know, ignored platinum for a while there just because it was so range bound for so long. Right. But earlier this year, when it was moving above 1,000 gently for the first time in a while, the chart stood out to me. So I always love those setups where the fundamentals are not 100% positive yet, but maybe they're starting to turn slightly more favorable. But meanwhile, the chart has a very nice base, a potential breakout pattern. And that's what platinum had back in like March, April, May of this year. And then it, you know, it started to move up, you know, above 1,000, above 1,100. Right. And, you know, the fundamental case was not compelling yet. It was still unclear. We're still hearing that, you know, all the ICE engines are going to be faded away by 2035. Right. We're not going to use platinum for the catalytic converters anymore. Like that was still like out there in the air, but right. there was a case to be made for people were buying more hybrids, and hybrids still have platinum in them. Right. And then we have the gold valuation case, which honestly, in terms of like jewelry and stuff, like there's a real substitution case to be made there. Like if you're looking at like a platinum necklace, a gold necklace for 20,000, the platinum version is 10,000. You might very well go for the platinum necklace, you know? Yeah. So it with the breakout during the summer, which was beautiful. And the breakout just in the last month has been just phenomenal. It's breathtaking, quite frankly. And right. I think there is definitely, some FOMO in the air, because when you see platinum move from 1,700 to 2,500 in a few weeks, right? That's just like, yeah, there's some FOMO buying involved in that move,
right?
But yeah, go ahead.
I just wanted to say your comment about looking at the fundamentals and the technicals, one as a driver, the other as a catalyst, whether it be the fundamentals as a catalyst or the technicals as a catalyst. That's what Druckenmiller does. You know, so you're a good company there. He will, I mean, I'll do it too, but I'm sure he's a lot better at it. I understand the fundamentals. I understand the flows. And because guys like you and me have understood the fundamentals to be good for a long time, if we're not paying attention to technicals, we're constantly buying the top of a range. You know, we're constantly getting hosed because the market's not ready to respect our opinion yet. Doesn't care about what we think yet. But when you have that in the back of your pocket, and to your point, even though the fundamentals in platinum were a little bit muddy, but the chart is telling you the fundamentals aren't going to be muddy very long, buy it. Well, that's a very Druckenmiller thing of you to do. So congratulations.
Yeah, well, obviously I wish I had done more, but yeah, I mean, and also very important from a trading standpoint is gauging risk, right? So I don't know what the upside could be. Like when I was buying platinum at 1100, 1300 seemed like a big move, right?
Yep.
But I felt like my downside was only 10%. So I love that setup where I can get in at 1100. You know, hey, I'll stop under 1,000. You know, if I'm
Right.
wrong, fine. But man, I could have $200 upside, $300 upside, $400 upside. I don't know what the upside is, but I know it's way more than 10%, right?
Right.
And so those are great setups. And I think obviously silver was a similar setup earlier in the year. Now, I would say the risk is at least as much as the upside here. In the near term, it could drop to 60, it could go to 100. I have no idea what it will do in the near term. And I think it's a dangerous market, quite frankly. So when I have people texting me about option trades in silver this weekend, my response across the board is just, I'll pass. No thanks. Like I'm not touching this hot stove right here. You know,
I agree.
But let's talk about what's happening on X this week, because like silver is obviously now in the headlines. Finally, the move at the end of last week finally grabbed people's attention, because like a 10% rally in a day in silver is not something that happens very often. I think I may have only seen it once or twice in my life, quite frankly. So now we got headlines, and we got all these influencers on X. I mean, it's across the board. You have the guys who are just the avowed silver bulls, who can't see a bear case here and see a supply squeeze and a $200 price in early 2026. And then you have the guys who think this is the silver bears, who obviously got this move wrong, or maybe they're even short, or they've been trying to short the move, and they're saying this is just a speculative trade that has no fundamental bearing whatsoever.
Yeah.
So, you know, what do you make of what's going on X this weekend?
Oh, you know, I mean, I'm like you. I'm in the process of, forming my opinion, but I'm kind of bucketing interactions, and I know that I'm in one of those buckets. I haven't figured out which one yet, but it would seem. Let's see, so you've got I guess we'll kind of create the clicks here, right? We're in the clicks, but I don't know where yet. So you've got the people that are out there saying, no matter what, they're saying the fundamentals, like I'll use my phrasing, the fundamentals say that silver should be higher. This is the realization of that. You're crazy if you think it's going back down. Okay. Now, those people, which I'm in line with spiritually, I love them, but they're out of their mind. Of course it can go back down, because that's the nature of manipulation. That's the nature of short squeezes. That's the nature of a government stepping in saying you can't own it anymore. I'm not saying they'll do that, but that's the nature of coordinated governmental effort. So even though I agree with all the fundamentals, the next 6 months it could be, stopped, for whatever reason. So that's one side. And then you have the other side. There's two people on the other side that are like my poster boys for this. I won't say their names, but one is an old-time trader, and he's a classic influencer, and is in the sense that I almost feel like he got a phone call and was told to tamp it down. Like all of a sudden it's like silver's overbought, it's not going to do this. The 200-day movement. I'm like, but he's got 300, 400,000 followers. And so it's popping up on my feed. And I'm like, shut up. I don't care if it's going up or down. I just know that for me, it's a sign of some serious instability globally. But then I see the fundamental guys pushing back on him. And I go, unfortunately, it's a circus. I mean, I'm part of the circus, but it's a circus. Now the other bears, hilariously, the other bears, and I love this, are the crypto influencers. And this is very sad for me, because there are as I'd say that I'm on the periphery of crypto. Guys, when I was educating myself more deeply about crypto and Bitcoin in general, there were influencers out there. And I was like, all right, so I don't know anything. I will pay attention to what they're saying, and then I'll research it to find out if it's true or not, right? And there were several that passed the test, and so I would follow them and just not hang on there everywhere, but just look at what they speak. They think critically. Well, in the last 48 hours, Robert, those guys have jumped on the bandwagon, and I'm looking at them going, why do you care if silver goes up? If you're a Bitcoin maxi, why do you care? Like that's just a sign that Bitcoin should go up. Or another example is, why do you think silver is going to go back? Like one guy, when this is over, silver will go to $20. I'm like, wait a minute. Now, this is a guy that I had on a pedestal at one point. You're a guy who was giving me the quantitative mathematical reasons for Bitcoin's dominance, and now you're just saying, pulling it out of your ass, that silver's going to $20. I'm like, you're just a guy who wants to be in the spotlight, and the spotlight is on you now. We've all experienced that, when we make jokes when someone says to me, I'll say something about Iraq, and I'll say, oh, Vince, the precious metals expert now is a Middle East expert, and they're right. It's like I'm out of my lane, but it's okay to say,
it's okay to have an opinion on something that you're not a world expert on. I know that's like a big thing that people don't like people to cross over and talk about other topics, but it's okay to have an opinion,
right?
And sometimes it comes off as like we're acting like we're an expert, but it's just the way that text messaging works,
I know. I mean, but it's like the little petri dish that we're in, and but I mean, I don't know that I'm doing it justice, except to say that anytime a market moves, any market, right? We're just experiencing for the first time. Silver people just don't like, what's this? What is this attention? I've never had it before. We're like shell shocked. I mean, I am. We don't know how to act, and right? Not just not act. And the worst thing is, I can handle how we don't know how to act. The fundamentals. I'm like, yeah, the fundamentals, but I want to be careful. This is what I say to people that are in my community. Yes, the fundamentals, but we want to be careful. What's your time frame? Like, for example, someone said to you options. I'm like, why would you buy options right now? Why don't you just buy the metal and put a stop in? I can't get as much leverage. I'm like, yeah, if you're doing it with leverage, then you shouldn't be doing it. And then to another guy, I'll say, well, you want to stay away from calls, you want to do a butterfly, you want to do a put spread hedge, all these crazy things, but they're all tactical. But those guys I can have a conversation with. The fundamentals. And I go, well, what about the capital controls? The fundamentals. What about if we have another conversation with China and everybody opens up and says, kumbaya again? Silver drops $20. Silver drops $30. But when this new group of people comes on and just says, well, I've been a trader for 40 years and silver's going to $20, or, well, I'm a Bitcoin maxi and silver's going to $5. I'm like, you people are morons. Shut up. That's it. So, but I don't mind dealing with the fundamental bulls that I have to talk down. It's the idiots that I have to talk up.
Well, I think it's interesting you say that about the Bitcoin maxi guy, because I can sympathize a little bit with that person, even though obviously I don't agree with that statement about $20 silver.
Right.
They're feeling some envy because their asset, their trade is not working right now, and somebody else's trade is working really well. Right. So the natural thing is to be jealous and try to knock it down. Now, it's this very simplistic human emotion, that's on display there, but I get it. But one thing I've learned, regardless of what it is, and if trade I'm not in, trade that I've had no part of and I'm not benefiting from, I respect markets, and you have to respect the silver market here. So while I'm going to be the first one to say I have no idea where the next $20 is.
Yeah.
I bet maybe 55, 45 it's higher, but I'm not putting any big money on that opinion. I respect this all-time high move. I respect this bull market. And if you're a markets person, if you respect markets, you cannot say that about silver. You can't look yourself in the mirror and say silver's a bubble, it's going back to $20. I have no respect for the guy that says that. Right? You got to respect this bull until it's proven otherwise. Period.
Right. I mean, you're describing, I think, I mean, there's nothing special about silver in this regard. You're describing a phenomenon when another market moves. I'm filled with envy, and so I'm a little bit touched by envy, and so I want to comment on it or have an opinion on it. And you know what? I'm with you. That's the normal part about it. But for me, the traumatic thing for me, this is all about me, Robert. The traumatic thing for me is all those people that I clinged to find out the fundamentals of something. They're not fundamentalists at all. They're just talking a story that Saylor told them. You know, be long Bitcoin because there's only 21 million of them. Yeah, I know that. I'm long Bitcoin. I understand that. it. But you can't be that smart about Bitcoin and that stupid about silver unless you're not that smart about Bitcoin. And so I feel damaged. It's like never meet your heroes. Well,
yes, never meet your heroes.
I met my Bitcoin heroes, and they're morons. Some of them are morons. I mean, there's a lot of
meet your heroes, and maybe the sad truth is have no heroes.
Right. I guess the Bitcoin experts are as stupid as the silver experts.
Yes.
So I feel like I've reached my level of intelligence.
And in the food fight that is X at times, everybody shows their ass from time to time, right?
Yeah.
Unfortunately. Right. So look, where are we in this bull? So let's, all we have is the past. We don't know the future. We're just guessing the future.
Right.
Compare this silver move to like 79, 80, 2010, and 2011. What's different about it? What's the same? What's different about it?
Okay. So let's start with where you started with it in terms of the behavior. Your buddies calling you up and FOMOing it, but at the same time, they don't own it. That is, I think, the crux of the problem, right? There is FOMO behavior, but they're not adding to a long position. They're not being greedy. They're just kind of silver curious, So that's the crux of it. And extrapolating that little microcosm out, it is like 1979 and 1980. It is like 2011 in terms of price. And it always does end the same way. Like, I want to just make that clear. But what is it? And it is this run, not this asset. This run will end the same way. So there's your overbought comment. Now, there was a very good, I thought, article put out by Michael Leibovitz at Real Investment Advice. And I'm not plugging him. I'm just saying I liked it because I shared it with my people. And he said, essentially, silver's parabolic rise has been remarkable. It's more than doubled, yada, yada, yada. And this is the key phrase, because I want to argue first that it's the same, and then I'll punch a hole in it. But mind you, you have to respect the market. So I want to respect history. And I think that's what you're getting at here. The current slow surge closely mirrors, I'm paraphrasing him, 2 previous price jumps. Now, the post financial crisis silver surge in 2011 was because of a crisis. The response to the crisis was the great financial crisis. We printed a lot of money, and then Europe had the Grexit crisis. And so no bonds were good. Let's put into something else. And the silver shorts covered, the silver specs got in, but there was no real demand. The ETF market was immature, meaning ETFs are physically demand pulling, but they were immature and they were being gamed. There wasn't any Asian demand. There wasn't any European demand. And you could raise, and here's why you knew it was going to end. When they raised margins on paper futures, the market dropped. Why? Because, well, there's a lot of leveraged longs in there, our FOMO friends, right? And when the margins go up, they go, oh, I have to double the amount of money I put in here to capital to own my silver. Screw it, I'll get out, right? Okay, that happened in 2011 with good old-fashioned, raise the margin rates and, slow things down and solve the crisis in Europe. In 1980, The same thing happened. Now, I'm not saying it wasn't physical. The Hunt brothers bought the physical, but the Hunt brothers were taking profits from physical to buy more physical. And so when the government said, this is what they did, when the government gave permission to the exchange to make the exchange liquidation only, it made people that had access to limited funds who were profitable unable to add to their position. So it basically raised margins to 100%. And in doing that, the producers and miners and shorts who made up the hub of the exchange back then could wait out the Hunt brothers. Now, those two examples, although there's physical involved in 1979-81, it's the same thing. It's leveraged, speculative longs. Now, I know the Hunt brothers thought the end of the world was coming, but they were leveraged. So it is the same. We are raising margins. It is capping rallies. It is slowing it down. From an RSI point of view, yeah, RSI is still under 85 in silver. Of course, it's at 95 in monthly, but on the daily, it keeps breathing. Now, it hasn't breathed in the last 3 days, but there's a sort of a cycle. So the COMEX raises margins, or the CME raises margins, and you know what? That worked before for two reasons. One, those other rallies were speculatively driven, and you could observe that in the open interest. Number two, there was no other exchange in the world to trade silver on. And so when you raise margins on the COMEX, you raise margins on the world. So we're raising margins again twice, and the market has paused and rallied, or dipped for a day and then rallied, as opposed to paused, dropped, and got decimated over the next several weeks. And that's because the margin raises are, this is where I disagree with Leibovitz. The margin raises are slowing the trend. Government interaction cannot reverse the trend. The trend is, speaking to a technician, the trend is what it is, and it can be slowed in terms of speed, which is what margin raises are doing. They're shaking out all the longs, but it's going to continue until there is a big backstop step in, like a governmental control lever. So while on one hand, if you're a financial person, you're looking at this saying it will end the same way. It always ends in tears. And you know what? It will end in tears. I say that I'm fully prepared for a $20 sell-off tomorrow. I'm prepared for it, but I'm not prepared for the $40 sell-off, which could also happen. I'm just like, I don't. It's bigger than me, But to say this is over, that we could just print money and it will stop the need for physical silver, is to say that the LBMA is still running smoothly, because if it was, they would be selling at $80 instead of buying at 75. So I believe this time is structurally different because it's fundamental. And you can raise margins to 100% on the COMEX. It'll only make it a spot market, and it won't make the silver come out of the ground tomorrow. Higher prices are what's needed to reestablish equilibrium in this market. That's my long version.
Very, very well said, Vince. Yeah, so multipolarity is the big difference between today and 2011. What a difference 14 years makes. The world is actually a much different place than it was in 2011. And it's interesting just to look back to that 2011 rally. So like the very end of that rally, spring 2011, silver almost doubled in 4 months. It was almost a double. It was like a 95% move from 26 to 49.80. So we're at now exactly a double. Well, actually, we went just now a little past a double on Friday in 4 months.
Right.
So it's a similar magnitude over a similar period of time right now. But I think a little bigger picture. I think a little longer term, and I think back to that bull market. I think that the post-financial crisis silver move was actually the ninth inning, the final extension of the 2002 to 2011 bull market. So I look back to where silver started that move in 2002. It was about $4, and now it was 4 and change. So it was really a 12x move over the full cycle. The entire cycle was about a 12x move in silver. So I look at this cycle and I say it started in 2020. It started with the COVID crash.
Oh, Jesus Christ, you can't talk like that.
Yeah.
You're making me FOMO now.
No. So I say, wait, 12x is going to happen by the end of this cycle. By the end. So I go 12 times 12 and I get somewhere 130, 140, 150. So I think my big picture silver target is more like 130 to 150, but I don't think it has to happen in January. I don't think it even has to happen in 2026. Now we're already at 80, but I know. I prefer a little calmer silver market here. I'd love to see it calm down and consolidate 65, 70, 75. But unfortunately, I think we've opened Pandora's box here with the move last week. And so there's not going to be a calm market until there's more violence first.
Yeah. I have an observation, and it's actually going to be a question. First, you said, would you say 2002 to 2011, and you saw that as a 12x?
12x.
Okay. So I'm not pretending to be an Elliott Wave person, but I know enough about it. I know what 1s and 3s and 5s are. So you would say the blow-off rally in 2011 is basically a 5 in Elliott Wave terms?
Yeah.
Okay. So that makes this rally a 1 or a 3. Is that?
It's a 3. Yeah, I would say it's a 3.
Right. It's a 3. Right. Okay. So we're not in the 5 yet, and the 5 is where the blow-off comes. Yeah. We want to see like an ABC down that takes us to 40 or 50 before the next rocket ship. I agree.
The textbook would be a retest of 55. Okay, the textbook would be a move down to 55 at some point in the first half of 2026 that scares the piss out of everybody and makes everybody bearish before the real wave higher, either later in 2026 or 2027. And then maybe we get my random 130 to 150 price target. Okay, so now I'll make the comment that ties to your random target. When the U.S. Listed silver as critical, this is again approaching it from a different discipline. I wanted to see what that could mean for silver, and I meant that from the point of view that when you list something as critical, you encourage holding, you deputize companies to buy more, you subsidize production, but the production doesn't come online right away. The acquisition comes online right away. And so I looked at the last 2 metals that were made critical. And I said, what happened to them over the next 5 years? And that was lithium and uranium. And I did an analog. It's just an analog. And I did this when silver was trading 40, right when we said critical mineral. And I even wrote it up. And the analogs were using a hybrid of uranium and lithium over their 5-year trajectories in terms of percentages, in terms of log normalness, trying to make it apples to apples as much as I could. Well, there were 2 numbers, and one of them was $143 over 5 years, not tomorrow. So here we are at 80, and you want to say, I guess what I'm saying to my bull friends, as well as my bear friends, if silver goes to $143 tomorrow, I will sell almost everything, because it's supposed to go to $143 over the next 5 years. If it goes there now, fine. I don't care if it goes to $200, but it will go back down and it will regress to the new mean, whatever that mean is, and then I'll buy it back. So I'm hoping that you're right, and 130 to 150 is not a horrible target, but a pullback to 55, 60 is in order, because I think it's got too much attention right now. Yeah. They don't care about gold; they care about silver. Well, think about it just psychologically. The marginal supply and the marginal buyer. So, right. Like $50 an ounce in 2025 is really not a high enough price to make grandma pull out her silverware or her old silver dollars that she's been holding for 40 years
Right.
and go to the coin shop and sell it all. It's not enough money. But $100 an ounce might actually motivate grandma to take some of that silver. It might just be enough to move the needle.
Well, that's the economics of it, right? I mean,
yeah, and then the buyer, I'm sorry, but I'm not going to the coin shop and buying silver at $100 an ounce. I mean, I'm on strike at 100 and I'm waiting for a pullback.
yeah.
And I think a lot of people would think like me. So frankly, it's kind of logical that we've reached this like $75 to $80 level, but it's happened very quickly. And really, most of the year has been spent in the 40s and 50s, right? Or actually, I mean, like way back in January, it was in the 30s, right? But this price level is very new, and the market really hasn't, accepted this yet. We've just got into the 70s.
Right. $1 a day.
Look, I got some football games to watch, Vince, but there's one more topic. This has been a fantastic conversation. I really want to thank you for your time. But one more topic we got to get to. We got to talk about miners and talk about price levels and price acceptance. This is a very interesting topic because a lot of people asking me about, silver, call options and silver. I said, look, the real trade now at this point is got to be in the miners, because if we look at all the producers' decks, their presentation decks from Q1 2025, Q2 2025, and all the juniors and their projects, what prices were they using to evaluate the economics of their gold and silver projects? Well, a lot of them were still using 25 earlier this year. In fact, some were even using 20, right? So only recently have we started to see 30 and 35. So forget about 50. That's not in the math at all at this point. And definitely 75 is not even contemplated, right? So even if whatever happens, silver goes to 105 next month and then it drops back to 55 or something crazy happens, right? The point is they're not even priced for 50. Right. So that's the trade here. And in my mind, it's very clear.
So the trade that I'm getting from this, because I'm thinking about this as well, is if silver drops $20 tomorrow, $30, whatever it is, they're going to decimate miners, but it'll be unjust because they haven't raised their production all-in sustaining cost yet, and therefore it'll be a fucking gift. That's what I'm hearing.
Yeah, so all the analysts and all the hedge funds that do their models, they have not priced these stocks for $50 silver yet, right? So I mean that's my main point. And the all-in sustaining costs are still under 20.
No, I agree with you. I mean I wouldn't have a basis for agreeing with you at all, except that isn't that what just happened in gold? Gold went sideways for 4 months, and someone said, oh, shit, these miners are making money. Maybe that's going to happen with silver. But I wanted to sell off so I can buy some. I agree with you. My next trade is going to be to go heavily long silver, although I don't know which ones yet. I'll probably just buy an index like every other idiot. Like I'm in the idiot class when it comes to that. There's one thing I wanted to say. It's actually a little bit different, but it's related directly to what you're saying. If you're looking for a catalyst, and maybe you're not, but if you're looking for a catalyst for it to spike the way it has, and I have alluded that China is being squeezed a little bit, I'm going to give something that I firmly believe, and I believe this for a couple of years, and I see it coming, and it may be why we're getting ahead of ourselves now. The BRICS are de-dollarizing or trying to, and they're looking for good collateral so that they don't have to own U.S. bonds anymore. And they found that in gold. But for the past 4 years, China has been buying under the radar all the silver it can get its hands on. India has been buying below and above the radar all the silver it can get its hands on. Now, why am I saying that? Why does that matter? Because the industrials are now competing with sovereign entities that are looking to buy silver for a valid collateral alternative to the dollar. Now, I'm not condoning that. I think it's suicide, because if you take silver out of the industrialist hands and you put it in monetary hands as collateral to de-dollarize, you're asking for trouble. But I'm bringing that up because I think what we're starting to really see, between Russia saying that they're buying it, between the Saudi central bank buying it, between the Middle East tokenization of silver, which makes it an investment vehicle, between India buying silver and then telling its people in the same breath, you don't have to sell your silver anymore, bring it to us and we'll give you a loan against it. They're monetizing silver while industrialists at the tech level are clamoring for it. So I think this perfect storm, which is converging on China, is really a competition between investment interest, collateral interest from the BRICS, and technological interest in the industrial side. So I guess what I'm saying is I'm giving an explanation of why this is happening, and I believe that's why the squeeze is happening. And I believe industrialists are going to lobby the government to get a lid on it, and something's going to happen, and then we buy our dip. That's my prediction.
Yeah, they're gonna get a lid on it, but the silver that's in the ground is still going to be extremely valuable and a lot of optionality, and it's going to become it's going to become even more important for major corporations to vertically integrate, into mining, and for the government to hoard these assets that much more.
Absolutely, and that's the $140 price right there. Yeah. That's the math. I agree.
Yeah, and look, we've had a great year in the mining sector, and obviously I'm not counting on this to happen again in 2026, but it could. And we never know how far bull markets can run. And there's a lot that's that argues in favor of the fact that we're still early in this bull market cycle, and we're certainly not in the final inning.
We're in a three. We're in a 3 of 5. It's the way I'm looking at it.
Right? Okay.
Right.
Fair. Yeah. So we're in the middle. We're in the middle of the cycle.
Right. Can I ask you a question before you take us out? Are you comfortable listing any silver miners that would be something you'd consider buying on a dip?
Yeah, I would, but I'll throw a bunch of caveats out there. It's your money.
You can just tell me off air if you don't want to do that.
No, it's fine. I'll do it. I do this all the time, but I'll just throw it out there that it's your money, your responsibility. I don't share in your profits, so I don't share in your losses, and it's very difficult to trade these stocks sometimes, especially when they start to turn parabolic. But as far as just putting together a watch list of companies to learn more about and put on your radar, first of all, you have like the Pan American silvers of the world, which are like best of breed, top tier. Right. You have the Heclas of the world, which is only in North America. So you have good, jurisdiction, safe jurisdictions, all in the US and Canada, with a little bit in Mexico. And then you could get down into like the juniors, where I definitely dabble and spend a lot of my time. And I would suggest like a Highlander silver, which you actually have to go to Canada to buy. I mean, yeah, you can buy it on the OTC in the US as well, but they just made a fantastic acquisition. And with Highlander, you have like 3 billionaires as the biggest shareholder. So you have like, the Eric Sprotts, the, Lundin family, and Richard Wark, who's also a very kind of stealthy, smart mining investor. So I would recommend that one. I'd recommend Integra Resources, which is gold and silver, but with a big silver component, in Idaho. And if you want to get really risky and speculative, go down the risk curve, but also with a lot of potential upside, I would recommend Hercules, which is big on the TSX Venture in Canada. So you have to kind of go to Canada there, but it is on the OTC as well, and that's also in Idaho. And they have a big silver part of their project. It's copper and silver.
Right. Okay. Thank you. Thank you. I mean, I'm going to add that to the list that I have, but this is helpful. I mean, I started as a fundamental analyst, and miners were one of the sectors that I studied, but I haven't studied them in a long time. But this is good. I'll start drilling down. Thank you very much.
Thanks, Vince. Thank you for your time. This was a fantastic conversation. Vince is a must read on Substack. There's literally nobody else that I would say you absolutely have to subscribe to on Substack. I would say Vince, GoldFix, you absolutely have to subscribe to him. He's tireless. He puts out great content, thinking outside the box, and just always something for me to read and think about every day. Thank you, Vince.
Thank you, Robert. Thank you for the kind words too.